I'm not sure if you can hear the rain on the roof of my shed quarters, but what a gloomy start to a Monday morning. £33 billion wiped off leading UK company shares on the start of trading this morning on Monday. A combination of factors, really. This new strain of coronavirus, which is running rampant across London and the southeast of England, resulting in the closure of ports, a ban on travel from the UK to several European countries. That's number one. Number two is further lack of progress in Brexit trade negotiations. We've missed another arbitrary deadline of yesterday, Sunday, but trade talks do continue. And that means that shares have opened lower in London and also across European markets. So in this video, I want to take a look at those two driving factors, why investors are nervous as we head into Christmas week, what should otherwise be a nice, cheerful, happy, positive week. So looking at those factors, what it means for you and your money, what we're likely to see next. I'm Martin Bamford, a chartered financial planner, and I make videos here about personal finance, investing, and happiness. Sorry, once again, not much happiness to report in this video. If you would like to become part of our YouTube subscriber community, do press that little red like button and join us. It means you won't miss out on any future videos here, and it's completely free as well, so go and tap that little red subscribe button. So markets opening about 2% lower in London and also across the European markets this morning. Pound sterling taking a hit as well today. And really two big factors which I'd like to delve into a little bit driving those reductions in markets as we open today. This new strain of coronavirus which has been identified, and again it's early days as we heard from Boris Johnson on Saturday evening, but so far the science suggests that this new strain is about 70% more infectious than the strain we knew about before. Look, it's nothing unusual for a virus to mutate, for new strains to become dominant. When viruses replicate in the human body, they make mistakes, errors are caused, and sometimes those errors prove to be a more successful version of the virus, successful in the sense that they can spread and replicate to other people more willingly. So that appears to be what has happened here. The good news, I think, is that so far, and touch wood on this respect, the vaccines which have been developed to date do still appear to be effective against this new strain of coronavirus. But because it's early days, because the science is still being assessed, I think it's quite right and proper that our European neighbours are nervous and use emergency powers to limit the amount of traffic between the UK and the continent, because they don't want to see a similar mutated virus running rampant in their countries. It's worth pointing out that these travel bans that have been introduced are very temporary, in the short term at least. So France, which introduced a ban yesterday, has said it's initially for 48 hours. Belgium, which has also introduced a ban but has only done it for 24 hours. So a much more limited travel ban taking place there. But we've also seen travel bans between here and Ireland, Italy, some other countries, the Netherlands too. So this is causing issues, and I guess a concern from an investor perspective is twofold. One is the impact this has on airline stocks. And we've already seen the owner of British Airways this morning and EasyJet, we've seen their stock price fall by about 9%, because clearly if they cannot fly to European capitals, that's bad for business, particularly at this time of year. So that's one impact of this. The other is the impact it has on already very fragile supermarket supply chains. So we know that the supermarkets in this country operate on a just-in-time basis. It's how they keep prices for food, groceries so low. And just a temporary disruption at the ports will quickly translate, sadly, into quite significant disruption on the supermarket shelves. And while the government are telling us not to panic buy, and of course panic buying is always a bad idea from a societal point of view, we should expect, I think, to see empty shelves if this ban of stuff leaving the UK lasts for too long. That's important to think about as well. Whilst this is a ban on travel from the UK to Europe, I suspect we're not going to see hauliers wanting to send their drivers across the channel into the UK this week until some clarification is there on this ban, because they'll be really concerned about them getting back in time for Christmas. We've already seen those huge queues down the motorway into Dover. And of course, if you come into this country with your lorry, with your freight, you've got to turn around at some point and try and get back across. With this travel ban in place, how's that going to happen? So I think investors are rightly nervous for this reason about supply chains, about airline stocks. Those seem to be the two driving factors. So that's number one. this mutant variant of the coronavirus, which is prompting some European neighbours to ban travel from the UK. And then factor number two that's unsettling investors today, this morning, is that yesterday we missed another arbitrary deadline on trade negotiations between the UK and EU. So Sunday was set as a bit of a deadline saying that we have to get a trade deal agreed by then. It still hasn't happened. The good news is that trade negotiators are still speaking today on Monday. So between London and Brussels, talks continue to take place. Realistically now, even if a trade deal is agreed, will there be time to write that into law, to have it approved by the UK House of Commons, to have it approved by the European Parliament? It seems very unlikely that the detailed legal text can be drawn up in time, can be ratified in time by both sides. So the most likely scenario, I think, now is that the UK and EU leaves its trading partnership on the 1st of January 2021 and reverts to World Trade Organization rules. That means higher tariffs, that means restrictions on trade, sadly. And in the short term, as I've covered in previous videos, that likely also means a short-term spike in price inflation for some goods and services because of the impact of those tariffs. So those are the two big factors which are spooking the market, spooking investors this morning. And then pound sterling has taken a bit of a tumble this morning after a nice 4-day run. That isn't necessarily due to the coronavirus mutant variant strain. It's not necessarily due to the trade negotiations not making progress. But in the US, we've had confirmation of a $90 billion package of aid designed to help with their own COVID-19 crisis over there. So the US dollar has strengthened in response to that aid package, and therefore pound sterling looking a bit weaker against the US dollar. So that's a separate issue. Look, it's Christmas coming up. Let's try and be positive. Let's try and be happy. I know it is gloomy out there. The rain is fairly miserable too. But there are better times ahead, I've no doubt. Today is the winter solstice, shortest day of the year. Days get longer and lighter from here on out. So wherever you are, I hope you stay safe. Hope you manage to stay positive and optimistic. Thank you for watching this video. I'm Martin Bamford, and when it comes to your money, the more you know, the faster it can grow.